I'm with Mandy once again today. Welcome, Mandy. How's it going today?
Hello, Etienne. Yeah, really well. Very early here in Melbourne, but you have winter coming, we have summer coming. Will be a beautiful day, 26 degrees.
Oh, wow. So
Yeah,
cold here. It's incredible. So, yeah, we have to deal with it. Anyways, a different part of the world, and that's totally fine. Yeah,
exactly.
but Christmas coming soon, so that's good. Welcome. We have, Isman, welcome. I think I said that right. Computer's far. Yeah, Isman, welcome.
Ishan.
Rylan, welcome again. What's up? Once again, Rylan, I think you're here every week, which we appreciate a lot. And that's awesome. We'll talk about dream psychology again today, but we have a few different topics. And I think the beauty of these videos is that every time we come in and talk, we always have some of the same ideas, but we always do something different, which is really, really cool. So today's topic is going to be how to master dream psychology. And that reminds me that very early when I started to trade, the thing I wanted to do was to master everything, to master psychology, to master analysis, to master everything. And then I was told by, I think, Andrew Maneker, that you cannot master anything. So the only thing you can do is to get better and better over time. But it's very hard to master something. And once you think you have mastered something, it's usually the time where you have to learn even more. So I'm just gonna ask you, Mandy, how do you think we can kind of either master or become better in training psychology? Is there like an easy path or an easy way?
Easy, yep, there is. It is
Wonderful.
interesting because it's us humans who make it actually hard. Um, I work with so many traders, and everybody has um, a really realistic story why they can't succeed, and it's all in their mind, right? Um, so we all have stories of what's holding us back, what our blockages are, and why we can't succeed, what we have to overcome first before we can succeed. But if we were to let go of those stories, then the path would be really easy. The reality is we don't, so it's a little bit harder than it has to be. um, it's also interesting. I totally agree with Andrew, who's, by the way, I really respect his work. I love what he's doing, and Andrew's message is one of his key messages is, so, we all have our specific field in the field of trading psychology. It is very broad, trading psychology. So Andrew has a specific message. Steve Ward has a specific message. Denise Schall has her specific message. I have my specific message. So please, listen to all of us, because there's certain elements that you guys will relate to with Andrew more than with me, or there's certain elements that you will relate to with me more than with Denise, but we are all a package, So Andrew's message is, you need to become comfortable with what's uncomfortable, with what's unfamiliar, because taking a loss is uncomfortable. It's not fun, right? And then get your reframe around it, like taking a loss is actually your best friend because it protects your capital. And if someone would want to burgle your home, you would hopefully protect your home like a lion. But we don't protect our capital like a lion. We protect wanting to feel good like a lion, and that doesn't lead us anywhere. And the thing is that in trading, we need to do the things that 95% of people don't want to do. Now, what are the probabilities of succeeding if 95% of people don't succeed? They're very small. So we need to focus even more on what's uncomfortable and becoming comfortable with the uncomfortable. And this is why so many Navy SEALs are being quoted in trading psychology, while athletes are quoted in trading psychology, because all the people who succeed in those fields do what's uncomfortable, aka getting up at 5 in the morning and going to training before work, or needing to diet. If one of my clients, I've got a new trader, he's a martial artist, and he fights in a very low, like, I don't know, flight weight or something. He has to diet like crazy in order to fight in his weight class. And usually the fights are after Easter. So Easter, when everybody else is stuffing their face with chocolates and Easter eggs and yummy roasts, he diets, he only has water and vegetables, etc. Right? So it's uncomfortable, isn't it? We have the racing season here in Australia at the moment. And hey, Alex, you have the racing season here in Australia, like horse racing, right? And the jockeys, they can't eat, they diet because they can't exceed the weight restrictions. But as a payoff, they get to ride in like the most amazing races in the world. So for everything that's uncomfortable, we get a beautiful payoff. And so the number one, so for me, my message always says 3 steps, right? And when you listen to anyone who is in the active in the high performance field, we all have the same message because there is just nothing new to it. Number one is you have to become self-aware. Self-aware to the point that you know those unfamiliar, uncomfortable feelings creeping up. Because what happens is those feelings creep up and then the automatic response happens. So you're in a losing trade. You don't want to take the loss for whatever reason. What do you do quickly? You move your stop loss if you have a stop loss. If you don't have a stop loss, you let this thing run. And so if you want, and then you have a big loss, right? You blow out your account. So usually traders come to us with the end results that say, I keep blowing up my accounts. I need to learn how to be disciplined and patient. But the work starts here when you become aware of this uncomfortable feeling creeping up, and then you can do something. If you were a chiropractor, for example, a lot of people come with their back pain to the chiropractor and say, oh, you know, my spine hurts because a disc slipped. The slipped disc is like the blown up account. It's like well down the path before the first signs came up, feeling stiff in your back, having a little headache. These are the signs that tell your body is telling you you need to do something, dude, because you're on the path to a slipped disc. And when you have a slipped disc, I don't know if you ever had one, Etienne, it's freaking painful. It's as painful as a blown up account. So self-awareness is step number one. Step number two is looking at your behavioral patterns that follow those initial feelings or initial thought patterns. And step number three is to create a new strategy around your previous behavioral pattern. So if your previous behavioral pattern, so I was working with a guy last night, his behavioral pattern was like this. Amazing trader, right? Sequence of, let's say, 7 profitable trades. Then what happens is he gets in a loss. He starts getting really angry. So had anger issues on top of that. And then moving his stop loss because he gets so angry at this market wanting to take his money away from him that he that he didn't want to feel that anger and wanted to avoid the pain of taking the loss. And that led him to being like a hamster in the wheel. That's how he described himself, just never getting out of this loop. So you can see how and he wasn't aware of that. So these were the 3 steps that we ascertained that we elicited what was going on for him. And then the next step was for us to create a new behavioral response to that anger. And that is what's going to get him out of the hamster wheel. Does it make sense?
Yeah, I love it. I think that's a great message, especially the part with Andrew Manicure. I think that's something I learned myself the hard way, and I was pretty impressed with Andrew. And one thing I heard is, like, I don't know who said this, but if you just do the opposite of what the majority of people are doing, which is like, let's say, waking up at 5 a.m., exercising, you're much ahead, and you're never going to be wrong in your life. I think that's something I try to live by, but not always easy, of course. We want to say welcome to, of course, Alex. Welcome, guys. If you guys are watching the replay or the live video, comment below. We want you guys to be engaged and chat if you have any question. Let us know how we can help. And quick reminder that we are at week number 3. It's going to be week 4 this week of the 12-week program that I'm doing with Mandy. And every single week we do a webinar. We sit down with traders, and the breakthroughs and the lessons have been so impactful for now. I'm even impressed myself listening to Mandy and like everything she has to offer and everything she has to teach. So links are going to be below if you guys want to check it out. But if not, we'll still keep talking about psychology today. And Mandy, I think you had an experience you want to share from Twitter. Is that right?
Yeah, that's right. So we here in Australia we are a very close knit group, and so there's the guys. So I'm in Melbourne, and there's the guys up in Sydney. And the Sydney guys, they are mostly trading small caps in Australian small caps. And I noticed that in that group, the exuberance started to happen. You know, the markets, the Aussie market has been like crazy, you know, like jumping 50 points, which is massive for the Aussie market. And so I sent a message to my friend who is kind of leading the group on Twitter. I said to her, I notice exuberance in your group. You need to keep them humble, otherwise the market will do their job and humble them. And so her friend's my friend's name is Helen. Helen said, "Yeah, I know, I can see that." And one guy he posted this quote. He said, "I love this quote," and the quote is from a very well-known trader. Only a fool gets complacent in the stock market. Always be prepared for the opposite side of the trade, especially when you feel confident. So I said to him, "Great quote." And what does it mean? And how does that play out in your behavior? Because this is what I see a lot on social media. A lot of traders talk about those ambiguous sayings, you know, like be disciplined and patient. What does it mean? It doesn't serve anyone, you know. And this quote sounds really good, but it doesn't serve anyone. So I want to explain what it means, right? So you're in Sydney. That's awesome.
Yeah, we've got people from Sydney, UK. It's incredible. We have me in Canada. So people from pretty much everyone in the world, which is really cool. If you guys want to comment, let us know where you are. Always cool to know. And could be some
Yes.
places to travel also. We never know.
Exactly. And please ask your questions, because when you ask us questions, you bring the best out from within us.
Oh yeah,
And
and just wanted to remind that the best live we do are the ones where people ask questions. They have like in depth thought, and we can go in depth on those questions. If you guys have any question, comment in the chat box, and we'll make sure to answer your question throughout this event. And if not, if you want to comment and you're watching the replay, comment, and we'll answer after, of course.
exactly. So to get back to that quote, what does it mean? So only a fool gets complacent in the stock market. Well, that is already triggering fear in people that they are fools. Because how many times have we been told that we are fools when we were kids? And that had, you know, serious repercussions in our relationship with our parents, you know, feeling not good enough, feeling not loved, and so on. So when you read that as an unaware trader, there will be a feeling, a subliminal feeling of fear creeping up. And so the next question is, the next sentence is, always be prepared for the opposite side of the trade. But what does that mean? I mean, we all know that we need to be nimble. But what it means in the context of the trading group in Sydney is they all made really good profits. All year was really tough. If you look at the Aussie stock market, at the XJO, it was just sideways for months. And then it broke up and went like a rocket. Now finally they made money, and they made good money. Such good money that one of my girls, she came from Sydney to Melbourne to stay in the Langham Hotel, and she invited me for a really nice afternoon tea, which is like really expensive. That's how much money she made in playing small caps. So they made all this money, right? And they do the normal technical analysis or whichever analysis they do that works when the market is going up. And now they continue that, let's say next week, and say that next week it doesn't work anymore for whatever reason. Market has changed, market environment has changed, whatever reason, right? And then they're in a loss. What now happens in the mind of the trader is, well, swear word. And then I don't want to take this loss. I worked so hard to get all these profits. I don't want to give my profits back. And then the fight or flight response happens. The flight response is being paralyzed, not doing anything, letting the trade going deeper and deeper into a loss. And so, you know, the guy that I was working last week turned $5,000 into $40,000 and then lost it all. And this is how it worked, right? So, go, I don't want to take that loss. I don't want to give it all back. And then started to fight for it. Fighting means binge trading, getting in again and again and again on the same trade, but not without not with thinking, not with technical analysis, but trying to force the money back. And then it all goes unravels. Start feeling bad about yourself. Because you feel bad, you make even more stupid mistakes, and then you're the hamster in the hamster wheel again. So when you read tweets like this, only a fool gets complacent. The stock market, always be prepared for the opposite side of the trade, especially when you feel confident. This is what it means. It means that you have made your profits, you don't want to give them back. And in your attempt, I think it was Templeton who said, most people lose money in the attempt to avoid losing money. And this is exactly what happens. So be prepared. When you trade like you did last week, and you made money last week and now you're in a loss, recognize that all your natural behavioral patterns of fight and flight response come up. And this is why you don't want to take your loss. And this is why you must take your loss and follow your rules. That's where the self-awareness comes in and doing the what's uncomfortable. Yeah.
Love that. And I think I think Alex said, yeah, I think we need to be very careful with those kind of rule of thumb kind of saying in trading, because things like you have to get 2 to 1 reward to risk, or you have to risk 1% or 2% of your account. I think those are things that work in some places, but not everywhere. So you have to question everything. I think really, really
And
important.
also the 1 or 2% depends also on your profit loss ratio.
Exactly. Yeah.
So if
Exactly.
you have a 35% profit loss ratio, you need to have a very different risk management than if you have a 75% loss ratio. And I know traders who have 35%, they're doing extremely well, but they have 0.5% profit risk. They take their little losses, and then they get on a runner.
Yeah, yeah. And some people do the opposite. So some people are gonna have a
Yeah,
very small reward to risk, like a 1 to 1, but they're or even a 0.75 to 1, but they're gonna maybe win more often. And that's where things really vary. And that's where
yeah,
you have to really test everything for yourself and only rely on
exactly,
data, because data is the only thing telling you whether you're right or not. So I think that's
exactly.
yeah.
Yeah,
And I want to maybe go back on Alex's question, which kind of is a question. He thought about so what he's doing is I think he has a system right now that he wants to trade, and he's like debating between either sticking to the plan or tweaking a strategy to make it better. And I think there's always ways to make something better, but there's also a time where you have to focus on what you trade right now. And if you don't focus and don't get the data correct, it's kind of hard to stay consistent in the result. So the only way to get consistent result is to put in consistent action for some time. And I think that's something you have to be very careful with. So perhaps you want to trade for a number of trades and see then if you can readjust, but only after like 20, 30 trades or even 50 trades. Otherwise, it's not worth it to readjust all the time. What
yeah.
are your thoughts, Mandy?
Um, all that you said, and adding
Sure.
to that, out of my own experience is markets change, and they have changed tremendously since November last year, since Trump came on board. So for me, I'm naturally a counter trend trader. So I would, in an uptrending market, I would take the reversal patterns. This is according to my personality, my lifestyle. This is just who I am. That's how I perform best. And how do I know that? Based on my statistics over 15 years of trading. I know when I perform really well. Now, counter trend didn't work anymore. So if you look at the DAX, right, all the reversal patterns over the last year, they all failed. And I needed to adjust my trading strategy according to that because the market changed. I needed to change. And so you need to look when you tweak your trade. When you have a string of losses, right? You need to look at several things. Number one, under what market circumstances did your strategy not work out? Was it maybe that you didn't work, that you weren't disciplined in terms of didn't follow your strategy? Was it that you had a life event? So one of my traders, he just had a baby and he didn't realize how much the new baby is going to impact his sleeping patterns, right? So he's tired constantly and he's a prop trader, so he needs to perform. So what is the circumstances under which you perform well and under which you don't perform well? So you need to do a contrast analysis. Once you have all those data, then you can tweak your plan so much better. So I have 3 trading strategies because I realized in the DAX there's 3 kinds of markets. There's the really impulsive market, which is like bang, 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 just going up or just dropping like it did last 2 days. Yay, happy bear. Then there is the volatile market when it goes to sideways. That's when I perform really, really well. And then there's the creeping market when it goes tick up, tick down, tick up, tick down, tick up, tick down, or the other way around, tick down, tick up, tick down, tick up. Just, you know, the DAX loves to do that. That's the sweeps, you know, the high frequency sweeps. That's when I lose money, when I'm not performing. So knowing these 3 different markets, I have different types of trading strategies. Like creeping market, don't trade. Impulsive market, go with the flow. And volatile market, yeah, I perform, I trade the heck for, 20 hours, I don't care, because that's the time when I make hay, when the sun is shining for me. This is the kind of awareness that you have to get around your plan before, so that you can tweak it according to what works for you. You also need to know what your behavioral patterns are, your behavioral preferences. You need to know. So for me, I used to be a show jumper. I always have to tell that story. So I'm really good at scalping because this is how I work best. I use someone who would work best as a swing trader or as a long-term trader. You need to know yourself so well. And step number 1 is to look at, if you play sports, what kind of sports do you play? I've got the trader that I work with, he's a marathon runner. I'm not going to put him into a short-term strategy. He's a long-term thinker. He performs really well swing trading, if not longer-term trading. So we now test longer-term trading if he performs better at that. Yeah, so yeah, I hope that gives a little bit of context.
Yeah, for CFOX, yeah, I think that's a good answer. I think looking at someone's personality, and sometimes you kind of need to have someone external to tell you kind of what you are, and I think it's much easier that way. But aside from sport, have you spotted some other things people can look at to determine what time frame they're best at trading, or they
Yeah,
have to kind
what
of
I do.
test and see?
Yeah, what I do with traders, I put them through a intense behavioral profiling, where I look at their thinking patterns, where I look at their behavioral patterns, where I look at every area of their life. We call it the wheel of life. And based on their life context, I can then say, this is really what would work best for you, and then we try it on. And most of the time, I would say 99% of the times I'm right with it, because, I mean, it's not rocket science. When you have someone who has a family and works, for them it might be harder, especially in Australia with the time zone. Might be harder to be might be harder to do the short-term trading, because they don't have they can't be in the market when the flow is going. So they need to do swing or long-term trading. Behavioral testing I do in terms of how do you know you have done a good job? Is it because someone outside of you told you, or is it because you know inside of yourself? So it's a sequence of 30 questions that we go through that tells me how you habitually interact with your environment, and that tells me how you would habitually interact with the stock market, because with the trading Forex market, how you do one thing, you do everything, we say.
Mm.
Yeah. So yeah, that's it. It just needs an hour of testing, and then we can give pretty good feedback on what would work.
Wonderful, wonderful. I
Definitely
think that's
see
something that
Fox.
people have to
Mhm.
understand. Yeah, and uh, so as I said, the first thing I think is really with the time you have available. It's like don't try to pick a style you cannot maintain. I think that's just
Yeah.
basic fact. Even though your personality may be better for your style, if you cannot sustain it, it's not really worth it. But I think Mandy had a good answer on that topic.
Yeah, and you know, a lot of people, a lot of traders, they want to trade on the 1 minute chart. This is what I do. But why do I trade on the 1 minute chart? Because all my statistics tell me this is the time frame I perform best in. Most traders want to go into the 1 minute chart because they feel that's the only time frame they have control over, but it doesn't suit their personality. So the marathon runner wanted to trade 1 minute chart, and it's like it's not your personality. You will not succeed because you need to be so fast. But it was a control thing, hoping that they have control, and then we need to deal with why someone has the need to control their life, their environment. Needing to control your outside world is usually due to a lack of self-trust in yourself. So what we then needed to do is we needed to look at what is it that causes that lack of self-trust, and what do we need to implement into his life that builds self-trust, that builds a strong sense of self. And then whatever market they choose to trade will come naturally to them. They will be drawn naturally to the market. And he loves Forex. He's really good at Forex. I got him out of trading the E-mini, and Forex is the market for him. Interesting, huh?
Yeah, of course. Yeah, really interesting for
Yeah,
me.
yeah.
Question from Jason. How do you judge the current market condition to apply your strategy? And for me, it's pretty simple. You look at the chart. So is it making higher highs? And I think Mandy explained exactly what the different phase are, like what the
Mm.
different phase of the market are. So if you can just look at a chart, understand is it sideways, is it trending, and right there you can apply the right methodology. So I just look at the chart and I know pretty easily. And I have a lesson on this on my academy, but I think just looking at the chart, you pretty much get the whole idea of what to trade. Is it making higher highs, higher lows, or not, or is it sideways? And you get pretty much a good picture of that. Yeah.
It's also every market has a different personality. You know,
Mhm.
the US dollar yen behaves very differently to the euro. So on I went long the euro on a few days ago because the DEX started coming down, and usually there's an inverse relation. Not always, but most of the time. So why not capitalizing on both, right? And that also helps me to assess the DEX. So when I see that the euro is behaving a certain way, I know that there's a high probability for the DEX to behave the opposite way. So understanding also how, or you know, like Canadian dollar in oil or Aussie dollar in commodities, understand how these relationships impact each other, and then it will help you to also understand the behavior of of the instrument that you're trading. The Aussie dollar loves 50% retracements. You know, look at what they love. The euro does not love 50% retracements. Euro is a very different beast. And that will help you, like, you know, when people talk about their dogs or about their children, they know the personality. They know when the kids are lying. They know what favorite food they have. And you need to know your market as well as you know your kids and your dogs and your cats and, you know, your spouse.
So the lesson's pretty simple. You see your conspirators as your dog, and everything's gonna be fine. You're gonna be good with that. Awesome. Yeah, I think it's a good advice for sure.
Hmm.
Naib is from I think Colombia. Welcome, Naib. He says,
Hello.
how long do you keep a trade? What time frame do you use? Do you ignore high impact news? Thank you. Both Mendy and I, we have very different styles. So I'm gonna start. I'm gonna tell you exactly what I do. Uh, how long do I keep a trade? It's about a few hours to a couple of days, sometimes a few weeks or a week. Let's say that's pretty much the maximum. What time frame I trade? I trade the daily chart and the 4 hour chart, and sometimes a 1 hour chart when I'm at home. And I also ignore the news. So for me, the news have either 50-50 chance of being for me or against me. So I tend to ignore them a lot, and it tends to work anyway in 50% of the time. So yeah, that's pretty much what I do. And I know Mandy, you're day trading, so that's gonna be a very different perspective. But maybe could you answer this question from for Nahib?
Yeah. So for me, it depends on the market. I usually start the 1 minute, also because of a very, very low risk profile. So the 1 minute I get in, and then, you know, we have low, let's say I went short, right? And then the following bars are showing lower highs, lower lows, lower highs, lower lows. And suddenly the 5 minute, the next 5 minute bar shows me a bearish engulfing pattern. So the bearish is still confirmed. Then I keep, you know, on my 5 minute time frame, stay short. Then the 15 minute maybe has a reversal doji, another short entry signal. Then I stay short. So I stay short as long as my market tells me to stay short. Now with the DAX, the entry was at a certain price, and then there was no exit, so still short. Yeah, there's no reason to get out of the trade. That is not always the case. Sometimes the market is volatile, and then I have a short entry on the 1 minute, and I only have 2 or 3 bars, and then I get out because then it shoots back up. So that is for me in terms of time frame. Most of my trades are shorter term, but sometimes I get the longer term trades as well, like, you know, in the last few days. As I said, I use the 1 minute because it's what works for me on the DAX. It's a personality thing. I do trade the high impact news, so I love trading news on Forex, or my best, my favorite. So when I trade FX, I look for when there's news, and then I look at how the, let's say the euro. Let's say the euro spikes up on the news, comes back down, makes a reversal doji on the 1 minute. I would then go short and put my stop loss above. And then I just take a quick short trade. That's how I trade news, because I trade such short term. Of course, it impacts my short term trading. Whereas you trading long term or swing trading, it doesn't do a dent in your trading at all, right? It's like, yeah, whatever. Yeah, so this is what I do.
Yeah, and that's going to be a very interesting topic to talk about one day, how to trade the news. I think I tried it very early in my trading and I didn't really succeed at that, but it's something I have kind of an interest for, but it's going to be interesting to talk about at some point for sure. So
Okay,
if you
yeah,
guys want
let's do
a
that.
video about that topic, how to trade the news, just let us know. We'll do something on that topic for sure.
Cool.
Now we have, well, we're going to hit 2 questions with 1 answer. I think that's going to be powerful. We've got C Fox asking what activities outside of active trading enhance one's judgment and performance as a trader. And the first thing that I will mention is meditation. And Jason just asked a question about meditation. Still looking for meditation for traders. I think you mentioned one on the last live lesson. I think it doesn't have to be super fancy. I think a few years ago, what I used to do is I used to do kind of guided meditation. So you put some earphones, you listen to some meditation and voice, and that works fine if you like it. I ended up switching to kind of regular meditations, just focusing on the breathing, and I think that's fine too. So you go with what you prefer. And I don't know if Mandy has some thoughts on meditation or how to do it. I know you might do it also.
Yes, so I personally don't really do meditation. I do mindfulness. And I learned it first with Steve Ward, the Mindful Minute. And that was really amazing, because my mind at the time was really busy. I'm just looking at Steve's website because Steve has those amazing here, mental training for trading success. I'm going to put the link into our chat. Oh, I have to sign in. Can you comment on the chat, Etienne?
Yeah,
Because
sure.
I can't.
Yeah.
Okay, so I'm going to put a link here into
Okay. Sure.
our chat. So so I do mindfulness because I found I just could not meditate. I just could not sit down and clear my mind. And rather than trying to do something so hard and frustrating myself, because this is what I ended up doing, getting the sense of not being good enough and, you know, being a failure because everyone else could meditate but me. So Steve taught me mindfulness and the Mindful Minute, where you you count your breaths for 1 minute. And for me, it's 10 breaths, around 9 or 10 breaths, or 11, depending on how stressed I am. So I take 10 breaths because I like the number 10. And so wherever I am, if I'm at the traffic lights or at the bank queuing up, I do my mindful minute, meaning I focus on 10 breaths. I don't need to look at the watch. I just focus on my breaths. 10 breaths. Everyone can do that at any time. And I also do mindfulness when, when I cook, when I cut vegetables. I'm really focused on how does the knife feel in my hand? How do the fruits feel on my hand? In my hand? How do the vegetables feel in my hand? When I put my hand on my leg, how does my hand feel on my leg? How does my leg feel underneath my hand? So this is mindfulness, and this has helped me a lot to become self-aware. So Steve has created those 10 mental training success sessions where he talks for, I think it's 10 minutes per exactly, to improve focus. That's 10 minutes per meditation, and he talks to you, as affirmations. I love them. I actually, Etienne, what we can do is, and I know Steve is cool with it, we can upload one on your website as a trial for everyone. I confirm it with Steve, but I know he's cool with it because he allowed me to do that with my traders as well. And then they can find out what it's like. Should we do that?
Yeah, sure. Yeah, we can try something like
Yeah,
that. And I think Steve
cool.
also has a book, Mindful Trading. Is that right?
Trader Mind, yes.
Trader Mind, exactly. Yeah, that's a
Yeah,
different title. But Trader Mind, good book that I read a few months ago, and I actually did a
yes.
video on that topic as well on the channel. So yeah, really recommend that book for sure.
Yeah, and I love Steve's work. He's just
Yeah.
amazing. So, um, so this is what I would start with, just the mindful minute, and then expand. And it's just about being aware. So scan your body before you go into trading. Like, is there anything that hurts? Oh, my neck hurts. Well, let's do some neck exercises to get that pain out of my neck. Or my back is tight. If my body is not nimble, then my mind can't be nimble. Let's do some yoga exercises. Go through a list of emotions. Tick off, I'm feeling whatever emotion I feel. Is that a helpful emotion? And in our training, we talk about emotions and how to move unhelpful emotions like anger, frustrations into helpful emotions like being focused and being calm and relaxed. Yeah.
Hmm.
Yeah.
Powerful, powerful.
You have to
And
go
TV game,
soon, right?
welcome. Yeah, it's gonna be all right. I think I just want to cover some of these other activities outside trading, and those. I think there's a lot we could talk about that all day.
Ah, yes.
There's plenty, and I will mention the second one, journaling, which is kind of trading related, but not exactly, and really, really important for traders to journal and to
You
not
love
only on trading
journaling.
but on everything around.
Mm.
Yeah, and Mandy, do you have any other activities? I know I have a few other, but if you want to mention some of the things you do on a daily basis.
Well, it depends on your personality again. So I have a trader that I just started working with, and he loves risk. When I did the personality profiling with him, this guy loves roller coasters and bungee jumping. What does he do in his trading? Roller coaster and bungee jumping kind of activities, really high risk. And I said to him, you need to go out every day and get it out of your system. Go mountain biking, do some crazy stuff so you don't need to live that out in your trading, because it's not appropriate in trading. Yeah, so if you're someone like me, I'm not a high risk taker. So I do yoga. I do a lot of yoga. That works for my personality because yoga grounds me. Yoga makes my body nimble, and also depends on your age. So if you're 20, you need to do other things than when you're in your 40s, right? So um, it's again, it's very personal, but I would do a lot of sports. It's really important because why? When you do sports creates hormones in our body, like serotonin, dopamine, and happy hormones. So when you are stressed and frustrated with your trading, go out, go for a run, do something to rebuild those hormones and build happy hormones to let go of the anger and frustration. Really important. Yeah. meet with your friends. If you're someone like me who lives in a country away from your family, because we have someone in our training who lives in Canada, but his family is back in India. Well, you need to make sure that you rebuild a family in that new country. So I have a family kind of, I have a friend who's kind of like a mother type for me. I have a friend who's a father type for me. I have a friend who's a brother type for me. And then I have friends who are just friends, right? So you need to rebuild that activity as well and make sure that your emotional needs are being taken care of.
Yeah, wonderful. I think it's gonna be different for everyone. The activities you do on the
Exactly.
side, but everything you do has to be trading related. It has to be done in a way that is going to improve your trading and make your trading better. So things like sleep, exercise, they all impact your trading. And so even though they're not activities you do necessarily, there are still things that you have to do properly and that you have to kind of maximize in a certain way.
Yeah.
So
Can I
that's about it,
just
guys. We
say,
appreciate. And yeah,
can I
go ahead.
just give one comment to CFox? So
Of course.
actually, I do the same. I do my analysis. I start with a higher time frame and go down into the time frames because I also want to go with the flow and not against the trend. So, however, I time my entry on the 1 minute because of because I want to keep my risk low. I personally don't have the emotional strength and mental strength to take big losses. And that's why I time my entry on the 1 minute to keep my losses small. Because I know if I have big losses, it really throws me. Now, and then I work backwards again. So I do my analysis, bigger time frame down to small time frame, enter to time my entry, and then I work my way up into the higher time frame to stay in that trade. So I hope that is clarifying it for you. Yeah. So many more
Yeah, I love it.
questions. Sorry, I know you need to
Of
go. We
course,
can't
yeah,
answer
we
them
could talk
all.
all day about your question and answer your question all day, but
Yes.
it's not very time efficient. But no problem. We appreciate, guys. Thank you for watching. And if you want to see the training that Mandy talked about, link is going to be below in the description. We're at week 3 right now of the 12-week program, and every single week is getting better and better. The topic are just fascinating, and I always learn even myself a lot from Mandy. So if you guys want to check it out, link below, and we'll catch you guys pretty soon on this channel.
And we try to keep
Ciao.
it really